As exports rose by 8% in January, that was far more than expected. Peter Hall is chief economist at Export Development Canada. Peter, let's just start with thank you for being with us. And
Pleasure.
What was driving the data here? What's behind the big increase?
Well, when we look at the data stateside, Amanda, it certainly seems to have gone very well for them in January. When we look at retail sales, they were powering ahead. And so we seem to have capitalized on that. Now, the interesting thing is when you get a surge of retail sales like that, it usually comes out of inventories. You don't typically see a simultaneous increase in our trade shipments. Well, welcome to a COVID world where crazy things like this can happen. So at exactly the same time, we're seeing these movements, which can only be described as rocketing up during the month.
How much, if any, of the export volume is being attributed to commodities, which, as we know, are running at pretty hot levels?
Well, there's a great story here for commodities. Number one, the home building that's happening in the U.S. is just going crazy at the moment. Who knows? I guess people confined inside of condos want to have something else that they can actually go to. There are renovations that are actually happening quite a pace because people are sort of dissatisfied with these places that they've confined to for more than a year now, or about a year now. And so that's really pushing our exports of forest products. They had another month on top of a few very good months. That's one of the industries that hasn't hurt at all during this entire episode. Mining is also doing very well. It's one of the industries that was hit to begin with, but not as much as other industries, and it's really taken off. That's a bit of a head scratcher because one might have thought, okay, build up inventories, you'd have some wiggle room inside of that industry. Absolutely not. The car building that is being done, the home building, and of course, Chinese demand, in addition to the demand from other countries around the world, has really ignited things like copper and other base metal prices at the moment. So we can see the tensions in that side of things. The commodity side is doing well, but this was a month where 11 out of 11 major export categories, from low value added to high value added, all did well.
And to your point, I mean, it's early in that U.S. recovery. It's obviously we're gonna see a V shape. We're capitalizing on it. Does that mean that there are months ahead of strong export data for Canada?
I think so, Amanda, and here's why. We had a V-shaped recovery inside of retail sales, and that's old news. We were 2 months down, March and April last year, and then May and June were just, they brought the U.S. back to 100% of pre-COVID levels of retail sales right then. So that's a classic example of a V-shaped recovery. But we know that the rest of the economy, stateside and here in Canada, hasn't come back. We've got industries like energy, we've got aerospace, the tourism industry, arts and entertainment, anything sort of attached to that whole continuum really has not done well. It's still down in the chasm, and it will come back. We know that air carriers will come back. We know that tourism industries will come back. It's just a matter of time. When they do, actually, they're going to be some of the greatest stock plays out there. But when they do, employment is going to shoot up, and we're going to have a more fulsome V, I guess, sort of a delayed V, where those activity levels are going to rocket up. So bottom line is, yes, we absolutely expect that this is not the last sort of rush of activity we're going to see inside of exports. The second half of this year is going to be very robust.
One other place that did not contribute, but if we want to put a silver lining on what we have to look forward to, are services. Really kind of anemic, as you would expect. Obviously, it's not a sector that's really operating here. How big a component of overall exports can that be when we think about what it might contribute in the months ahead?
Well, again, welcome to the K-shaped recovery. Even inside of services, you have industries that are doing very well, like finance and insurance. And to the extent that we actually export those services, well, those hardly looked back. They've done very well during the COVID period of time. But, look at the tourism side of things. We've already waxed on about that. But business services are one that's a real key concern. The longer we don't have exportable business services, the longer it is until we can properly do a merger and acquisition across borders, the longer it is that we can really have to wait and to seal that new sales deal with a foreign country, a big one. People-to-people movements are critically important inside of that. Well, That's turning out right now to be the number one piece of feedback that we are getting from businesses and the banks. And that is, we need those people-to-people movements restored. So there is all kinds of red carpet being rolled out right now for the restoration of the service sector, business services and those tourism services as well.
You know, we were just talking to Benny Tal at CIBC about the direct impact that a strong dollar can have on our exports. We are obviously at the levels where folks start measuring the perceptible decline, the effect that 77-cent loonie will have on exports. It's not happening here. What does that suggest to you about how strong our dollar can be in this environment?
Amanda, really the difficulty behind restarting an economy is getting your hands on supply that is out there. It's easy to shut down an economy. It's painful, but it's easy to do. Just talk to anybody in the auto sector. Turning it back on again, the auto sector is about the only one that does that well. And it's because they're used to it, with regular shutdowns that actually happen. Other industries are not so good at it. So if you have supply, at least temporarily, a Canadian dollar that is, hitting, recent or local highs is not going to be an inhibition. As long as you can deliver, people are ready to pay a higher price to actually get the product flow happening. That's what we're seeing right now. That's the messaging that we're getting from business.
So would that suggest that one of the conversation points there, obviously, is does the Bank of Canada need to worry and that when it does move on rates, it will influence the dollar to the upside? Should that be as big a factor, or does it take it off the table a little bit for the bank?
Well, the dollar has a lot of different drivers. One of them at the moment is commodity prices. We see a temporary increase in commodity prices now as the global economy works through this frictional difficulty that we're having getting restarted again. And, that's also underlined by the fact that we've got enough shipping containers around the world. They're just in the wrong places. So sorting all of that out is really what the world economy is trying to do at the moment. So those inflation pressures, which would lead perhaps in normal times to an interest rate increase that would move our currency up, the commodity prices moving our currency up as well, we expect to fade, once we get through this initial phase of reopening, the true reopening of the economy. So we might get some temporary movement there, but we're not expecting it to last, at least in the short run.
We do know that there are some Buy American provisions that will work their way through on the policy side in the U.S. Is that a concern, do you think, for Canadian exporters?
Well, it is. And the unpredictable nature, I guess, of some of the decisions that could be getting made is really what seems to cause businesses some consternation. How do they plan? How do they actually scale up to meet these up and coming demands? It's quite difficult to predict. And of course, with a fairly radical, I guess, change in regime and approach and so forth, it makes it even that much more difficult to predict. So there is a certain amount of sitting on the edge of one's seat that's going on here. I would say at this point, though, that there's a lot more attention being paid to the needs for diversification. China was able to recover well ahead of all other economies. They were basically 1 month down in February, and then the next 2 months, their trade volumes were right back to where they were pre-COVID. It took us a few months to catch up to their reality. And so a lot of eyes have shifted toward the Asia zone and the needs that are actually not just emerging, but very extant there at the moment. Now, there's no way they're going to replace the huge volumes that we send stateside. So it's still a key concern for Canadian exporters. But more and more, the eyes are shifting towards those East Asian markets.
Peter, it is great to have you with us, as always. We appreciate your time today. Peter Hall is Chief Economist at Export Development Canada.